Today we want to talk about a decision that I made 5 years ago. I was looking to get into a different business opportunity. I was tired of working up the corporate ladder. It wasn't getting me where I wanted to be. And so on the table, I had three decisions. It was either get into the real estate industry, start my own DBE firm, or get into the life insurance industry. And by the way, the life insurance industry was just like something on the table I wasn't even really considering.
Let's be honest though, the reason we never explored the real estate industry is because as we started to unpack it, we realized the real estate industry is trash. And most people, we see you on social media showing these elaborate homes, but we really want to dissect today the 7 reasons why we decided to pursue a business in life insurance as compared to real estate.
So those reasons why I was looking at the insurance industry and ultimately why I decided to go with the insurance industry is because of these 7 things, right? The first thing was the saturation in the marketplace. So let me be real with you guys. So when I was making this decision, I was thinking about my wife, I was thinking about my kids. Like I said, I was working there 60, 70-hour work weeks and I just wasn't satisfied, I wasn't happy. And so I was like, man, I got to do something different, all right? And so when I took a look at real estate, because that's what everybody was telling me to do, is like, that's what wealth is made. You got to have real estate, this, that, and the third. And for me at that time, it was just like, there's a lot of money involved. I didn't have the few $1,000s to get my my real estate license. People was telling me you got to spend $2,000, $3,000 for classes. It was just a lot. Now, me being a father, a husband, a homeowner, and I got 2 preteen daughters, that's very expensive. So an additional $1,000, additional $2,000 while I'm living paycheck to paycheck, even though I was making 6 figures as an engineer, it just was not worth it. So the second thing was, well, how about you get into real estate investing? That was a quick no, because I was just like, I don't have $10,000, $20,000, $30,000 to hop into it. And then the other option was a DBE firm, right? Which was a disadvantaged business enterprise. And I had seen some people make some great strides and made some great income from me coming from the engineering background, worked in government. I saw how those people who ran those companies could make great money. And so I was interested in it. But when I got into the red tape of it all, it was just like, man, I don't have the money. I don't have the connections. I don't have the right power plays, so I can't do it. So I was deterred from that. So let me explain what a DBE is, a disadvantaged business enterprise. And so while I was working as an engineer, I worked for the government. And so there are government contracts that's given out to a GC, which is a general contractor. Let's just say this big company, right, one of the biggest in the nation, they are doing, a project for the railroad system, right? Because that's what I worked on, the railroad system. And so they would bid, the entity railroad company would put a bid out saying, hey, we need this work done. And then a big company, like 3 big companies, would bid on a project, and whoever had the lowest bid would win the project and win the government contract. Now, there is a part of every single government contract that says you have to give a certain percentage to this smaller minority disadvantaged business who can't compete with the bigger companies. That's what I wanted to do. I wanted to build one of those smaller firms that you can actually be a part of those government contracts and make great income, because I had saw it. And so I went to one of the owners of a DBE, and I said, hey, is there any way that I can do this? Like, how did you get started? He was an electrician for 30 years and he saved up some money and he was able to get his business off the ground. And so I said, can I do the same thing? Even though I was going to be a competitor in a sense to him, he said, absolutely, Ellis. There's so much work available. I can't do it all. I would love to help you get involved. And, just sometimes in life, man, God will put things in front of you and you'll learn about different things, but it may not be for you. And that door may not be open for you. And whenever God closes the door, you cannot open that door. So every time I tried to set a meeting with the individual, it was just always some type of time conflict, and we just could never get together. And then I also found out just how much money was going to be involved to get it started. So I just let that pipe dream go. So now that door has closed and I can't open it, another door opened up. And a lot of times when we're praying and asking God, because guys, I want you to remember something. I prayed for 3 years for an opportunity. I prayed for something different for 3 years. And I didn't see it. One moment I thought it was going to be real estate, and then the next moment I thought it was going to be a DBE. And then out of the blue, here comes this, cockamamie idea to get into the insurance industry. And I'm like, yeah, that's not what God has for me. And so many times we tell God what he has for us and what he brings to us is not him.
I think an important thing to mention there is up until that point, you and I both went to college. We have 6-figure careers. Our identities at this time, guys, is really attached to corporate titles. And so the whole concept of entrepreneurship was even foreign to you and I at this time. Starting the DBE was like us thinking we're being risky. And so when we were introduced to the life insurance industry, like so many of you are probably looking at us right now, whether you're driving in your car, hopefully you're not driving, but whether you're at home or at work, and you're probably thinking, insurance industry, is this industry sexy? Is it lucrative? Is it fun? How diverse is this industry? And those are questions you and I were asking. So what we really want to get into today are the 7 reasons why Ellis and I built a business in life insurance as opposed to real estate. So what do you think the first reason is?
Well, going back to remembering that time, I thought about, I just said a couple of things, right? So number one was the startup costs. All right. And when I looked at real estate, I said it was a couple $1,000s. Investing was a few $1,000s, was multiple thousands, right? And as well as starting a DBE, right? $5,000, $10,000, $15,000, $20,000 to get it off the ground that I didn't have. But to get into the insurance industry, and by the way, like I said, guys, again, I was not really interested at first. Right? But there were things that I was looking for. There were certain criteria. Let me be very frank with you guys. I was looking for a direct path on how to become a millionaire. That was my only goal because I had already made 6 figures. So by the time I was 28, 29 years old, I made 6 figures. I'm like, well, if I can make 6 figures, then I can make $1 million. So now I need a direct path on how to become a millionaire because it's not in corporate America. Not the route that I was going. Maybe for some, but not for me and where my trajectory was. All right. And so when I sat down, I said, well, let me take a look at it. Let me get a little bit more research into it. The cost was very low. It was $200 to join a brokerage firm. And it was only another $225 to get my license. And I said, is there any other hidden costs, any other hidden fees? They said, no. There was nothing else. So I'm like, so my startup cost is only around $500?
Yep.
I was like, that's nothing.
Well, it's because you would spend thousands of dollars on gym shoes.
Now, hold on. Let me telling America now.
So that's, you had another bad habit, but that's why I think at that time, because I want to talk to you right now watching us. Guys, $500 is a lot of money for a lot of people, and we are not negating that. We're talking to the man or woman right now who for a fact you're looking to break into an industry where maybe the startup costs are significantly low in comparison to the return on that investment. And you understand that in order to make money, it's gonna cost you money. That's who we're talking to. So outside of startup costs, I remember you and I sat down and we looked at very specific metrics. The second thing that we looked at was the average number of agents, right? We wanted to know market saturation. And believe it or not, right now, there's roughly 3 million real estate agents in the country and only 600,000 homes for sale. That means there's one house for every 5 agents. That means for every one home that someone is either looking to buy or sell, there's 5 agents competing for that one sale.
Yeah, and guys, let me tell you, the unique words of market and saturation, we didn't know all of these things. Because the first thing I was thinking about before I hopped in was like, well, I don't want to talk about death every day. That was the first thing that came to my mind. And that's why so many people don't even think and consider the life insurance industry, because they say, well, I don't want to talk about death. Right? Or I'm really not aware. I'm not versed on this information. And then like Jasmine said, there's 3 million plus, real estate agents. But then I found out there's only about 400,000 life insurance agents on paper. right? But active, there's only about 100,000 in the nation. There are more active real estate agents in the state of California than there are life insurance agents across the entire nation. Let that sink in for a moment. So when I sat there and I heard that info, I was like, that means that my potential to make money in this industry is limitless, because there are 400 million Americans in the nation. 100,000 people cannot help 400 million Americans. Plus, the average age of an insurance agent is a 59-year-old male. He's thinking about retiring, getting up out the industry.
Yep.
He's ready to go.
Yeah, so I would say, guys, anyone looking to compare real estate to insurance, the gap between supply and demand is called opportunity. And that's really what you want to measure if you're interested in entering into the life insurance industry, which we strongly encourage you to do so, because real estate is highly saturated. The insurance industry, guys, actually is looking to recruit 60,000 new agents every single year just to keep up with the demand.
And that's a pretty big thing. And, you know, the other things that we consider, let's talk about the next bullet point. Number 3 is the market. Who needs life insurance and who needs a house? Who needs real estate? Well, you have to be in the market to buy a home. You have to have money saved. You have to have good credit, right? You can't have anything negative. I had learned that the hard way, you know, with those good old student loans. All my college student loan people out there, yep, just put it on deferment and forbearance. Next thing you know, when you're trying to buy a house, hey, we need that money. You can't have a negative balance on your account, on your credit. You can't buy a house, right? So when we were applying for the FHA loan, we definitely couldn't have anything negative as far as government loans, because most of my student loans were government, and the FHA loan is government. So you can't not pay the government and then they want to give you more money, right? And so going back to the market and who needs insurance, everybody needs it. Do you know that as soon as you're born and you have a social security number, you can get life insurance?
I think what most Americans don't realize is that the life insurance industry protects every American household when, not if, the 3 biggest financial challenges occur: loss of life, AKA death, unexpected illness, AKA health, market crash, inflation, recession, AKA wealth. So the reality is, every single person you ever encounter, whether it is your Starbucks barista, the gentleman washing your car, your hairstylist, your neighbors, every single person you ever encounter, you have these 3 things in common with them: life, health, and then wealth. And then I think the 4th thing that we looked at was the average monthly income for a real estate agent versus a life insurance agent.
As well as the speed, right? You know, and so, you know, coming into the industry, I was like, well, how long is it before I get paid, right? And, you know, Jasmine, I think you were just getting into how long does it take for a real estate agent to get paid?
So one of the biggest reasons why we decided to do insurance versus real estate was the average monthly income for a real estate agent in comparison to a life insurance agent. I know social media depicts a completely different story, and every real estate agent looks as if they're closing, you know.
Especially HGTV, right?
HGTV has really shined the light on the industry, but a lot of people are thinking that, you know, the average agent is closing 10 to 12 deals a month, and that's not the case.
Right.
We looked at the numbers, guys, and we found that the average real estate agent is actually only closing 6 to 12 homes a year. That's frightening.
It is.
To actually think that you're getting paid 6 to 12 times a year, you better be a good steward of your resources, because you're stretching that money.
Yeah, when you think about when you get paid every other week, at least that's 26 checks.
Exactly, yeah. And I mean, granted, you could, depending on the value of the home, you could be making $20,000, $30,000, but you still have to factor in brokerage fees.
Right.
You still have to pay your brokerage. In comparison to life insurance, the average, and let me say this, I do want to put a disclaimer, guys. Any form of potential income, this is entrepreneurship, is going to be rooted in your output, your work ethic, your ability to be creative, be innovative, your market quality, right? But I mean, for you and I, we can talk about our personal experience. We made 6 figures part-time in our first 10 months.
Yeah, and I mean, to add to that disclaimer, parents told us growing up, man, to work hard, right? Be a hard worker. But if you got a box of beepers today and went out and knocked on every door, you put it in the hard work, but that doesn't necessarily mean you're putting the hard work into the right industry at the right time.
Yeah.
And that's more so what we're talking about, is that the insurance industry is the right industry at the right time, even in this economy.
And you are all about not just making money, but my husband loves to make money fast. So let's talk about the speed in which real estate agents get paid versus life insurance agents.
I mean, yeah. So, you could do a life insurance policy today, sit down with a client, put that application in today on your computer, send it off. And sometimes it can even automatically get approved right there. And then within the next few days, you get paid out. If not, goes through the underwriting process, can take 2 to 3 weeks, if that, right? And you'll be paid out in a couple of weeks versus a real estate agent. That person has to find the person who's interested in buying a home. You got to go see the different homes. You got to put an offer in on a home. You got to make sure you're approved for the money to buy the home. And then all of these other different factors, it can take anywhere from 2 months, 3 months to 4 months to close on a home and be able to make that commission from that sale.
Yeah, I think one of the biggest things when you and I were sitting down was really breaking into these 2 words called recession-proof. They're so popular, everybody's talking about it. And pre-pandemic, the real estate industry really took social media by storm, claiming that it was recession-proof. And the minute COVID-19 shook the world upside down, we realized that, guys, nobody's buying homes.
Yeah,
People are afraid for showings. 6 feet of separation, you can't really have strangers inside of your home touring day in and day out. And not just COVID-19, but even if you study the history of recessions, remember in 2008, when the federal government had to bail out banks for giving mortgages to any and everybody, the housing market collapsed.
Yeah, I mean, one of the things that we found after the 2008 crash is so many of those individuals, loan officers, mortgage dealers, brokers, all of these different real estate agents, they got out of the industry, right? And so the new people that came into the industry around 2010 is those later Gen Zers, right? And even millennials like ourselves, right? Because during a recession, we had just got out of college. And so we were in corporate America. And so that market afterwards, 2010, 2011, just continued to go upwards for so long. So they really didn't think nothing was ever going to happen.
Yeah, I think, and I'm just like taking it from my, perspective, being a wife, being a mom, being a woman, the emotional side of that is like, that's an emotional roller coaster. When you really think about families were emptying out their lifelong savings, their retirement accounts to buy, their biggest investment ever, which is this home. And in a blink of an eye, the value of that asset is diminished. Mm-hmm. It's not to say that you should not invest in real estate. It's just that when thinking about your financial home and building your financial home for your family, what would you start with first, the roof or the foundation? Most people start with the foundation, and that's what the insurance industry does.
Yeah, I think people just forget that real estate is a long-term investment. It's not a get-rich-quick investment. Right, our families, they bought homes to build what's called long-term equity in the houses. rooted all the way back into the 60s was, hey, these our parents, our great grandparents, they bought homes, they stayed in for 20, 30 years, built the equity, took the loans out to put their kids through college, different things like that. That's what it was for, versus today where it's like, let's get rich quick, let's flip homes, let's buy, let's sell. It just doesn't work like that. Anything that's get rich quick is not wealth. And what we want our viewership to understand is that these conversations is about wealth. Can you make money in real estate? Yes, you can, right? But what we're talking about is wealth principles. Jasmine's talking about the foundation. That's what we're talking about.
Yeah, I think another thing that we looked at when comparing real estate with insurance was this concept of being able to build your wealth linear or exponential. And for us, when we would look at the real estate industry, it was really linear income. It was whenever I sit with a client, I sell a home, I make income. You and I were looking to become business owners.
And we wanted passive and residual income.
Bingo. So what's passive and residual income?
So your passive is an owner of a business. They're not there every day, but they have other people that's a part of their organization, company, establishment. They're working too as well. And while they're making money, the owner is also making money. All your income is not tied directly to all of your efforts only. That's what passive income is. And then residual is we want to make money on an anniversary of something. We want the money to come back to us. So on those life insurance policies, when we sell them, clients keep them over the years. Every year we will receive another payout because they kept their policies in force. Right? They're growing money in their policies, that tax-free income based upon that market, no losses. And every time their policy grows, we also receive a residual. So it's a win-win for everybody. And you don't get that in real estate, right? Because once you sell that home, that's it. That's over with. One and done.
I love it. I love it because, we have insurance clients all around the country. Mm-hmm. There is no cap of how many clients we can see. When we say your income can be exponential, it literally can be exponential. The best part of it is the agents that we have. You and I have taught well over 1,000 people, men and women just like you, how to enter into this industry, how to obtain a state license, how to start making part-time income. Many of them have been able to replace their full-time income from their careers and run their insurance business full-time. That is what I like to call the game of duplication. And after all, you don't really have a business until you're able to teach other people how to do exactly what you do and better. Do it better, do it faster, do it stronger, because we believe that our learning curve should be our agent's success curve.
Now let's go back to the recession. Right? And during that time, we were all nervous. We were all scared. We didn't know what was going to happen. Every industry is now shook. It's like, well, what's going to happen to our industry? Well, some phenomenal things happened to the insurance industry during the pandemic. We really found out who was pandemic proof and recession proof. So during the pandemic, everyone was in shock for the first few weeks when the shutdown happened, but we just moved to Zoom. We just kept running business as usual. We helped tons and tons of clients during the recession. We never missed a mortgage payment. We never missed a light bill because everyone remembers the bills didn't stop during COVID.
No,
right?
They did
and
not.
It's very unfortunate. I know a lot of people lost their jobs, different businesses went under, but the insurance industry didn't go under because of two things. Number one, people were obviously afraid of dying in the beginning, right? So there was that factor of, hey, we want to make sure we get covered. But the other factor that not many people know about is the income part, right? People were losing money in the marketplace, in their 401ks, in their mutual funds, in their stocks. All of these places was losing money. And it was like, we got to get out of this scenario, got to get out of this situation. So we were able to help people move their money out of the market into a protected product, which is called an annuity. And so that's how we were able to help a lot of people during that time.
So those are all of the reasons why we are so happy that we built a business in life insurance as opposed to real estate.
So here's what we want you to do. We want you to comment below, hit the like button, share this with a friend or colleague. Also, we want you to subscribe to the channel and for more content like this. And this is, the reason why we got into the industry. And we're hoping to help other people like you as well make a decision on coming into the industry. So with that being said, guys, that wealth and purpose drive you to prosperity, and we'll see you next time.
Holla.